Good morning, everyone. Hello. If you can hear me and can see my screen, kindly type in hi in the comment section. So let's confirm we're on the same page before we kickstart today's session. I'm waiting. I'm still unable to load up my chat. Hello, good morning, everyone. Can you hear me? Oh, great. Dark Ricky, thank you very much for that confirmation. My It took a while for my chat to load up, so I couldn't see anybody's response. Oh, great. Patrice Rodriguez. Oh, great. Hi, how are you? Good morning. Hashitaka. Oh, thank you very, very much. Thanks for the confirmation. Pali is happy here. I'm happy you're around too as well. Good morning to you. Oh, great. Thanks, Gary. Good morning. Beautiful. So, welcome to yet another beautiful session of Experience Spread Life, hosted by my humble self, Sharif Daramola. I shall be taking you on a trading journey where we shall be evaluating the chart. We're going to be looking out for trend continuation patterns, reversal patterns, market structures, and we shall be using these parameters to decipher and determine trading opportunities lining up for us during the New York session. And if at the same time you have a pair or you have a commodity you want us to look at, feel free to drop it in the comment section and I shall try as much as possible to squeeze it into my schedule for today. And one thing that is most important here is that we want to look at the pairs we deliberated on yesterday. I think we did around 6 or 7, I think six pairs thereabout we did yesterday. So we are going to be doing a follow-up details on this pair, and I shall be dishing out advices and what we need to do next. And if there is a need that we need to pass the trade, I will be informing you. So at this point, I would like to tell you to fasten your seatbelt. Try as much as possible to stay tuned in throughout the session so you don't miss out on any important information that I might be dishing out in real time. So without further ado, let's dive into the chart and let's see what is happening. So the first pair we are going to be looking at is the US oil as usual. And here we have the US oil right on our chart right now. So let's have a clean picture of what we are talking about here. If we remember vividly during the course of yesterday's live session, we were actually expecting a bullish momentum. We were able to take that move to the upside. Was it on this one during the course of yesterday's session? Okay, we had this move, so we're expecting price to come and do a retest of the $97 mark, which didn't happen. And I told you that if price breaks down below the $97 mark, then we want to be looking forward to waiting for price to come back into our major key level, which was identified on Monday and is supposed to be our major are determinants of price movement for the week. Now that we have this move from this area, we saw this move from this area down into our key level at $95.50 area. So what this simply means at this point, first of all, I would like to delete this as this is no longer relevant at this point. And then let's look at the structure we have here between on the 21st of July and now. If we look at the structure vividly, price action started here during the week around $94.50 area, and it appears price has come back into the level where it started this week. It started around here. It went as far as the $99 area, giving us a sign of a bullish momentum for the week, and price came back down into that same level we are at the beginning of the week. After which we started seeing something that looks more like a consolidation phase, which is something we want to pay significant attention to see how price action has been playing out, and let's see what is going to be happening from this point in time. And remember, we all understand that if we have a consolidation phase, we expect that we all realize that there is an indecision in the market. That is, participants in the market are quite caught up in a state of dilemma where they don't know where price action will go at this point in time. So let's see if we can be able to identify the potential opportunity lying up for us as we head into the New York session. But one thing I would like to say here, looking at the structure we have here, where price started from this point, this is where it started this week, went up into this area. I'm of the opinion that those who actually took advantage of that move did a quick sell, just quickly make some quick profit, which resulted in the downtrend scenario we saw here, and price is right back at that same level. So I think it's going to be a little bit cheap for us right now to buy the US oil. But that is on the surface, but we really want to go into the details of what the structure is giving us. So for me on this one, let's scale down to a lower time frame, and I think the 15 minutes time frame will be most appropriate at this point. So let's dive into the 15 minutes time frame so that we can actually see how that consolidation phase has been evolving in the last 12 to 16 hours. So now we have the consolidation phase around here that is between this point and this point here. And let's see how, let's zoom into the structure and let's see how the structure has been playing out in the last couple of, I think in the last 16 hours, thereabout. Hold on a second. I want to make this, okay. Hold on a second. I want to readjust our key level here, so please don't mind. Please be patient with me. Let me do just that. Okay. So we have our key level here. Or should we place at the $94 mark? Of the opinion that we should move it down into the 95. Let's move it down into the 95. 5.1. Okay. So 95 appears to be most appropriate at this point. So with the structure we have here, we can see we have this consolidation phase. Price has been juxtaposing between the $94.80 area and the $96 mark. In the last 16 hours, we can see how price action has been doing that. Now, let us identify this channel. Let us bring out our lines chart at this point, and let's connect the series of the resistant level we have here. We have a resistant level here. So let's connect it. We connect it, we have something like this. And I would like to give this a purple so that we can, okay, great. And then we should connect the support level too as well. And then what do we have? So we have a channel already. So we have a channel between the $96 area and the $95 mark. Now, if we look closely into what's how price evolved. We saw this move. Price came back into the $95 mark, then went back again into the $96 area, back into the $94 mark, and then we saw the sharp breakout of that $96 area, giving us a clue into a potential buying opportunity, which the sellers rejected immediately. But what happened afterwards, during the early hours of today, we saw a significant breakout of that level, giving us a clue into a bullish potential lining up for us here on the US oil. And then we saw price came back down again one more time, and let's see how price action is going to play out. So one thing I'm looking out for at this point, considering that we have a channel already, we all understand that from a technical perspective, we expect price to either break out of the channel to give us a signal, then we look out for confirmation in the form of a retest of structure. So we can either see a breakout above this channel, or we see a breakout below this channel to give us that signal we are looking out for. Now, we do have a breakout of that channel to the upside, giving us a potential bullish opportunity lining up for us here. So one thing I want to be looking out for at this point is to look out for ways where price will come back into this level where I want to take advantage of that bullish momentum right above that resistance level here. That is around the $96 area. Seems most appropriate to take a buy opportunity. Then the other scenario is this. If we do see a breakdown of this channel to the downside, remember, we don't get too excited at the sight of a signal, as we want to wait for confirmations in the form of a retest of structure, that is price comes back into our key level at $95 mark, or probably come into this area or the support level, after which we look out for reversal patterns to join the decline to the downside. So with these perspectives that we have shared so far, where will our take profit target be? That's the next question we should be asking. So let's scale up a little to the 1 hour time frame after we have identified that structure we have here on the 15 minutes time frame. So remember, we have a key level sitting at $95 mark, which I told you is going to be serving us for the week. We identified this key level during the early days of this week. That is on Monday. We saw this key level, and we said we are going to be using that key level to guide our actions going forward. And what do I mean by guiding our actions when we say key level? Key level, it means that if price continues to oscillate right above our key level, we want to be looking for buying opportunity. And if price breaks down our key level to the downside and oscillate around that area, then we want to be looking for selling opportunity. But at this point in time, we can see, if we even look further into the 21st of July, we can see that this area has served as a very strong demand level in the past. We can see one here on the 22nd. We had one also on the 22nd. We saw this demand level, which later failed, but price came back into that level to push price to the upside. And since this price moved back into this level, we have seen multiple rejection by the buyers at this point in time, giving us further confirmation that this is likely going to be a very, very strong demand zone that we could be looking for buying opportunity. So one thing we want to be doing here is to be looking for buying opportunity. And if I were you, it's most appropriate that we could take any buy at this point. That is, take a buy opportunity. I could risk it, take a buy here. But for the sake of being conscious, we want to look for confirmations. Then we want to hold on and see that price actually comes right back above that channel and above the resistance level at $96 mark area, where we could take that move to the upside. That is right above here. So if we are taking that opportunity right above the resistance level here, where will our take profit target be? If you remember, if you are with me during the course of our Monday live session here, we identified a bearish trend line that was holding price action since the mid of June, and after connecting the series of lower highs, we were able to identify this bearish trend line, the black one on your screen right now. So one thing I will suggest at this point is that we should look at that area for our first take profit target. That is this area here, this bearish trend line. We should use that for our first take profit target, which will dovetail to how many pips that is. At least that's around 350, 400 pips to catch here. So that's the first scenario we want to be looking out for as our first take profit target for any buy opportunity here. And then if price actually does a breakout of that very trend line, then we want to know that we are in for another phase of a bullish momentum. So we want to wait for price to come back to do a retest of that trend line, which might also share a confluence with the temporary bullish trend line we identified here during yesterday's session, after which a retest should give us confirmation of a trend continuation to the upside. But before that happens, we are aiming at a short-term perspective right now. So our first take profit target should line up with that bearish trend line for the meantime. So that is that on the on a possible bullish potential here on the US oil. Then the other scenario which I shared with you on the 15 minutes time frame is the possibility that we could have a breakdown of the key level at $95 mark. And remember, we are not getting too excited at the sight of a signal, as we want to wait for confirmation in the form of a retest of structure before we join the decline to the downside. So if we are joining the decline to the downside after the confirmation, then definitely we want to be entering a selling opportunity right below the resistance level here. That is right below the $95 mark area. And we should be having our take profit target within this potential demand zone area. And the reason why we have a potential demand zone area is because of the structure we have here. When we look into the past, we saw that this area has been a sharp rejection that push price to the upside. So we want to be looking at that area, at least the minimum of $92 area as our take profit target, which will dovetail to how many pips that is. That's around 200, 300 pips to catch there if price moves in that direction. But on a personal level, I'm actually thinking that we should be having a bullish move from here. So let's see how price action plays out at this point. And if you have any question whatsoever, feel free to drop it in the comment section, and I shall be willing to be of help to shed more light in that regard. So I'll be taking between 10 to 15 seconds off right now to read through the chat. If you have any questions, feel free to drop in the comment section. Hey 359, good morning to you. How are you doing this morning? Okay, Carrie, can you hear me now? Please kindly confirm you can hear me. 359, please confirm you can hear me clearly. So let's know that we're on the same page. Jim 97, hi, hey man. Hey you, how are you? And you too. Can someone confirm you can hear me clearly? Carrie, please confirm if you can still hear me. Let me increase the volume of my sound. Oh, great. Thank you very much, 359. So I'm clear. Okay, great. Thank you. So let's move on to the next pair from here, since there are no questions to shed to deliberate on. So let's move on. So on the UK oil, we were able to take some profit yesterday. We took that move to the upside, and I told you to move your stop loss to somewhere around the $105 mark area, which took us out with I think about how many pips that is. I think about 100 pips was cut on this one, and then we saw price come back into that key level of highs that we identified on the 104 area. Hold on a second. So we had our key level here. So let's look at this closely. So since the beginning of the week, price started the week at $103. We saw $103, then we saw the move that pushed price into 102 before price went as far as testing the $107 mark before we saw that move to the downside yesterday. And since then, price has been caught within a consolidation phase, just like what we saw on the US oil, and a little breakout of that resistant level we identified on Monday, and price came back down a little bit. So just like what we saw on the UK oil. So going into the New York session now, if we are going to be buying the UK oil, we want to see price come back above this level. So you can set your pending order, your buy order right above this level, right above the $105 mark at this point, since we already have a somewhat breakout of that structure, giving us a signal that we might be having a trend continuation to the upside from here. So what I want to be looking out for is price move right into our take profit target zone, which is right between the $110 and the $113 area, which will dovetail to about how many pips that is, at least a minimum of 550, 600 pips to catch here if price moves in that direction. Then the other scenario I told you I want to be looking out for is if we are going to be having a selling momentum, I want to see a significant breakdown of this level. So that is, I want to see price action. I want to see a huge engulfing candle take price right through the $102 mark, and that should be my signal. Then I want to wait for confirmation in the form of a retest of structure. It could come as far as 103 or come into the 104 level mark, where I want to be looking out for reversal pattern to join decline to the downside. And if we are joining a decline, if we look left, we remember that we identified this descending channel during the course of last week's trading session, and we saw the breakout of that channel here. And from a technical perspective, whenever we see a breakout of structure, we expect price to come back to do a retest of structure, and that is the trend line to take price to the upside from there. So since if we have a breakout of that structure, it's likely that price will come back into this level around the $95 area before we see a bullish momentum from there. However, I would advise that if a selling signal actually comes in, that is, we see an engulfing bearish candle strike through the $102 mark, a retest of structure, and a confirmation in the form of a reversal pattern right below the key level at $104, then I will be suggesting that we have a first take profit target at around this level, the $100 mark, at least for in the meantime, on a short-term perspective. Hold on a second. So we should be looking at the $100 mark here as our first take profit target, which will dovetail to about 300 pips here. And if we do have a breakdown of that key level at $100 mark, then a retest of structure should give us further confirmation to join the decline into the $95 area. So that is the scenario we'll be looking out for on the UK oil. So let's get ourselves prepared. Like I used to say, you might want to screenshot or munch my video so that you can use it as a reference point when you are about to make your individual decision on this one. And at the same time, we need to be very, very patient, as this pairs requires we wait for confirmation. So when we see a signal, we want to wait for price to come back to do a retest of the structure before we join the potential momentum that is evolving. So if you have any question, please feel free to drop it in the comment section. So let's see if there is a way I can be of help. $273 is asking that can I teach him sell or buy? Well, I'm not sure I understand what you're talking about there. Kindly rephrase that statement so that I can I can have a better understanding of what you're talking about. Sorry? HST Tech 100. Tech 100. Yeah, we are going to look at Tech 100. Be rest assured, we did something on USTech yesterday, and we're actually looking for a selling opportunity on USTech. So let's see how price action plays out. I think yesterday we had the selling opportunity. Price came back to do a retest of our structure, and let me just do it right away. Let's just do it right away. USTech. So let's go to USTech already, and if you remember vividly what our expectations were, let's go to the 4 hours time frame where I told you how a selling potential, a selling opportunity is most likely on the US tech. And the reason is basically because of the reversal pattern we identified here on the 4 hours time frame. Hold on a second. Um, re-illustrate that. We had this impulsive move to the upside from here. We saw something like this, and then we saw this move. It looks like a head and shoulder pattern, which is a very strong reversal pattern. Then we saw a breakdown of that key level, and it appears price did the retest of that key level on our 1 hour time frame, and we took this move to the downside from here. And I told you our take profit target is going to be right on this support level of the ascending channel we identified here on the 4 hours time frame. You can see we have an ascending channel here. So I'm looking forward to price coming to do a retest of the structure, at least for the first time. First take profit target around this area. Then if we see a breakdown of that level, then we want to wait for confirmation in the form of a retest of that trend line to take advantage of a trend continuation to the downside from here. So on the US tech, I'm more of bearish here on the US tech. Let's scale down to the 1 hour time frame. Let's see what is happening. Remember yesterday I told you to take advantage of this move right below this purple line, which if you are taking that move, kudos to you. You must have taken about how many pips right now? Around close to 200 pips, 200 pips before the retracement back into the level. And I told you that if we have price come back into the bearish trend line, which is one of the parameters we are looking out for this week, we have two parameters we are looking out for. We have the key level at $12,350, and we have this bearish trend line. So we said if price comes back to do a retest of this trend line and we see a reversal pattern herein, we want to take advantage of a trend continuation to the downside from here. So if how are you sell opportunity right below this levels appears to be most appropriate, right below the $12,251 mark is good for a sell. Then we take our take profit target should be at around this 11,900 mark area, which will dovetail to about 350, 400 pips to catch here if price moves accordingly. So also a caveat here, if price breaks down this trend line, that is if we see a breakdown of this trend line, then we want to wait for price to do a retest of the structure to give us further confirmation to join the decline. So that is my scenario here on the US tech. So I hope HST I made myself clear. However, if you have any questions whatsoever, feel free to drop it in the comment section. So let's move on to the next pair. The next pair we are going to be looking at is the GBPUSD. And on the GBPUSD, let's scale up to the 4 hours time frame so that we can have an holistic perspective of what we're expecting here. On the 4 hours time frame, if we look at the structure we have here on the GBPUSD, the first thing we will observe is that the GBPUSD has been on a bearish momentum drive. at least since the beginning of the month, it has been on a bearish momentum drive. And if we look at the structure we have here, between the later part of June and this point in time, we can see that price has been trending. I have this first trend line here, this dotted black line here as the first trend line. And then we have this other bearish trend line, the red bearish trend line here, which was broken during the our trading session last week. We saw the breakout of that structure here, giving us a clue into the inability of sellers to continue to trend below that trend line. So and since the beginning of the on the 15th of July, we saw our price has started to respect a bullish trend line. So I was able to identify a bullish trend line here for us to guide our action for this week. Hello, sorry. Okay, so let's look. So we have this bullish trend line that is that will be guiding our action this week. I want to see price continue to respect this bullish trend line for me to take to continue to support a bullish potential here on the GBPUSD. And if we do have a breakdown of that bullish trend line, then definitely we want to be of the opinion that the bearish move has finally begun back again. Then we wait for price to do a retest of structure. It could be the retest of this bullish trend line, or probably this bearish trend line here, after which we look out for patterns on lower time frame that will support a trend continuation to the downside from here. So that is the first scenario I'm looking out for. And remember, we are on a very strong bearish momentum, so it's more visible to look out for bearish momentum here on the GBPUSD. But let me show you why I'm looking for a bullish potential. So we'll see that on the 1 hour time frame. Let's scale down to the 1 hour time frame here. And the reason why I said I'm looking for a bullish potential here on the GBPUSD is because, one, this bullish trend line here, and then the second one is the supply zone here that was broken during the early days of this week. We saw a breakout of that supply zone here. You see, price was unable to break out of that supply zone since the beginning of the month. We saw how this area has been rejecting here, and then we saw a breakout of that structure around this area. Then price again has come above that area again during the early hours of today, and I'm of the opinion that we might be continuing to see a trend up. I'm actually in the trade already. I took the trade right here. I think I shared it with you yesterday at 1.20392, and I'm thinking that price is going to go right above that bearish trend line, the breakout of structure, after which a retest of structure should give me further confirmation to add more position to my existing trade with a take profit target at around the 1.215 area. So right now I've moved my stop loss to break even to protect my position. So let's see how price action plays out from this point in time. But one thing I would like you to know is this, that if we do have a breakdown of this bullish trend line, that we have a significant breakdown of this bullish trend line, we don't get too excited. We want to wait for confirmation as we wait for price to come back to do a retest of this trend line, either of the trend line. It could be the bullish trend line, it could be the resistant trend line. You can see they both share a confluence. Making that area a very sensitive zone to look out for. If we have a retest of that level, then we want to be joining the decline to the downside. And if the decline happens, our first profit target zone should be at around the 1.192 level, which still serve it as our major key level for the week. So, and that will dovetail to how many pips that is. If price breaks below the bullish trend line, we should be having around 100 pips to catch here. And if we see a further breakdown of that key level, then we could be looking to add more position to our existing trade. So my scenario here is to remain bullish unless I see a breakdown of this bullish trend line. Then I would have to change my scope in that regard. But for now, I remain bullish here, and I'm still expecting price to break above that bearish trend line to do a retest of it so that I can add more position to my existing trade with a take profit target around the 2.15 and the 1.22 area. So let's see how price action plays out. And if you have any questions whatsoever on the GBPUSD, feel free to drop it in the comment section and I shall be willing to be of help. So work 2307 is saying thank you. Oh, you are welcome. Thank you to you too. Sophie Gilo, hello, hi, how are you? Ahmed Jacob, okay, good luck to you too. Dino, thanks, okay, you're welcome. Any questions whatsoever? Are there any questions? Feel free to drop in the comment section if you have any clarification needed. I'm here and willing to be of help. Okay, I guess it's time to move on to the next pair. Haria Rao, good morning. I hope I pronounced that quite well. So that is that on the GBPUSD. So let's move on to the XAUUSD. On the XAUUSD, we were actually expecting a bearish momentum if we have a breakdown of that bearish trend line. But let's see what's actually happening. So the first thing I'll be doing here is to scale up to the 4 hours time frame. Let's see what structure we have here, especially for those who missed out on our analysis yesterday. So let's scale up a little bit to a higher time frame. That is, let's go to the daily time frame. And on the daily time frame, this is what we have observed here on the daily time frame. Well, the first thing I first of all shared with you here is that bullish trend line that has been holding price action since 2020, I guess. And we can see that price has been respecting that bullish trend line for over a year now, and at no point in time did we see price action oscillate or break down that trend line. And we saw our price came into the $22,070 mark before we saw that bearish move and one more rejection of that level. Then what happened? During the early days of July, we saw a significant breakdown of that bullish trend line for the first time in 2 years. Now, zooming into the structure we have here since the beginning of the month of July, this significant breakdown of that bullish trend line, which is the first in over 2 years now, is a signal that we might be having a bearish potential opportunity in a long term on the gold. Now, if we understand our technical perspective very well, we all know that after a breakdown of structure, a breakdown or breakout of a structure, we expect price to come back to do a retest of that structure to give us further confirmation to join the prior leading price action. And in this case, the prior leading price action is bearish. Now that we have a breakdown of that bullish trend line, technically we expect price to come back to do a retest of that structure with the hopes of rejecting that level to push price further to the downside from here. So are we going to be waiting for price to come back to do a retest of structure before we join that potential move? Well, that is not likely. We can't wait. This could take almost like 2 months before this happens. So we want to see if we are going to be seeing an opportunity in the form of we're going to be looking out for patterns that support a trend continuation, that will be doing a retracement of that impulse leg back into the structure it broke out of during the early days of this month, after which we want to be looking for that downtrend move. So let's look at the lower time frame to see if we are going to be, if we can cite a potential bullish opportunity that could send price into that bullish trend line. So with this information in hand, we scale down to a much lower time frame. Let's go down to the 2 hours time frame to see what structure we have here. So on the lower time frame, we were able to identify a key level at $1,720 mark, and the reason why that we have that key level is because of the structure that we have since the beginning of the month. If we look left, we can see that price action at one point in time has respected or rejected this key level as in the past. So let's look at this. Look at, you saw the first rejection here. Price broke down that level to come and do a retest, making this area a supply zone. Then it went further down again, then came back up to retest it again to make a supply zone, though it wasn't that huge. Then we had a breakout of that structure. Price came back to make it a demand zone, and then we have a demand zone here, and we also have a demand zone around this area. So with a demand zone around this area, so I was thinking, okay, fine, how do we take advantage since we already have a key level? Remember what our key level does? It guides us into any buy or sell opportunity. So if we continue to see price right above our key level, we want to be doing a buy. And if we see price below the key level, we want to be doing a sell. Now, in addition to this parameter we identify here, we also have a bearish trend line that has been guiding price action for some time. If I zoom back into the left structure we have here, we can see that since the beginning of the month of March, this resistance level, this red line, has been respected. In fact, late into the second week of July, we saw how price has respected that bearish trend line. We saw since it broke down that level, we saw it respect it once, we saw the second respect, we saw the third one, and then price broke out of that level here to form a double top structure, which I was of the opinion, I think there yesterday, that we could be having a significant breakdown of the neckline of that double top structure here. So if we have a breakdown of that neckline here, significant breakdown of the neckline, then the retest of structure should give us that move to the downside, but that never happened. We never saw that significant breakdown, as anytime price comes into the $1,715 mark, we saw multiple rejection, making that area a demand zone to look out for as we head into the New York session. So this area now appears to be more of a demand zone at this point. So I would like to label this area. So let's label it our demand zone for now. So for the sake of clarity, so that we don't mix things up. So we have a demand zone sitting at around the $1,715 mark area. So now with this information we have now, we can see that we have a bullish engulfing candle in the last 4 hours here that took price back above that key level. So one thing I want to be looking out for is a retest of structure. It could be a retest of this key level or a retest of this bullish trend line, after which I want to be looking out for patterns on lower time frame that would support a trend continuation to the upside. And if we are going to be taking that trend continuation to the upside, I will be suggesting that our take profit target should fall within the $1,734 and the $1,740 mark. And the reason why that is, if we look left, we can see that this area has been a supply zone in the past, and there is a possibility that we could have some sort of selling potential around that area that could shake some people out. So in the meantime, we should have our take profit target within this area, which will dovetail to about how many pips that is over. It's close to 1,600 pips to catch here if price does that. Then if we now see a breakout of the supply zone and then a retest of that structure, then that could welcome uh, welcome an opportunity to add to our existing trade with the aim of a take profit target at the next bearish trend line at around the $1,760 mark. So this is the scenario we are going to be looking out for. So let's scale down a little bit to the lower time frame to see what structure is giving us if we can actually have a trading opportunity right now, right here. So we scale down to a lower time frame, that is the 15 minutes time frame. And what do we have here on the 15 minutes time frame? Okay, we have this move. We have this impulsive move to the upside here. From the demand zone we identify here, we saw an impulse leg. And we all understand that if we identify an impulse leg, we wait for price to do a retracement move into our golden zone area before we think of taking advantage of a bullish continuation. So where is our golden zone area? Our golden zone area is between the 50 and the 78.6% of the previous impulse leg. So since we have the previous impulse leg here, so we bring out our Fibonacci retracement tool and run it through that impulse leg. And what do we have here? We have between the 50 and the 78.6 area as our next buy opportunity zone. So let's identify this level. So we have it right between the 50 and the 78.6, and then let's label it buy zone. So we have our buy zone here. I'm going to give it a green, then let's make this yellow. Oh, that's not good. So we have our buy opportunity zone here. So one thing I want to do is I want to expect price to come back into that zone, something like this. We could see price come into the zone or even come back to do a rejection of this bearish trend line, and then we look out for reversal pattern. It could be a double bottom structure, then a breakout of structure to give us that signal, then we join at a retest of a confirmation of a trend of a reversal pattern to join the rally to the upside. So this is what I'm looking out for. So if you had missed this move from here, then I would suggest that you remain patient and let's also wait for price to come back into our buy zone here at around the $1,718 area, after which I'm going to be looking out for a reversal pattern to take advantage of that move to the upside. So this is the scenario we're looking out for on the XAUUSD. And another thing I want to say here is this: it's not all the time price action does what we project or what we expect, as there are times that price might not even go that far, and then we just start seeing that bullish potential from here. So what I will be suggesting is this: we have a retracement phase going on right now on the 15 minutes time frame. So we want to wait for that retracement phase to end before we join the rally. So the retracement phase will only end if we sight a reversal pattern. It could come right on the key level here, but once you see a reversal pattern, you see multiple rejections of that level by buyers, then we know that, oh, we might be having a bullish trend continuation from this point in time. So that's the scenario we are looking out for here on the XAUUSD. And then the other scenario is this: if price does not go as expected, that is, we don't have that bullish potential, then the only way I'm going to be selling the XAUUSD is only if I see price break down this demand zone. Remember, we identified this demand zone that's been holding price action in the last close to 24 hours now. Price has been rejecting that area anytime price comes into this area at 1,714, 1,715 level. We saw our price has been rejecting this area multiple times, giving us a clue into the buying potential there. So if I'm going to be selling this one, I'm not going to sell right above this demand zone. I want to see a significant breakdown of that demand zone, which you can see also shares a confluence with that bearish red line I identify here. Then we might be looking forward to a retest of structure to join the decline from that point to the downside. So that's the second scenario we want to be looking out for. That is, if we don't see that reversal pattern that pushes price up there, we wait for, if price breaks down that trend line, then we want to know that price is shifting direction. And remember, we don't get too excited at the sight of a breakout. We want to wait for a confirmation in the form of a retest of that structure before we join the decline. And where will our take profit target be? If we look left, we can see that we have an area at around the $1,680 mark area, which has one time in the past been a potential opportunity for bullish opportunity. So because we have this kind of scenario here, we want to be having our take profit target around that area if we have a selling opportunity, and that will dovetail to, let's see how many pips that is. That's around close to 3,000 pips to catch here if price moves in that direction. And then if we are actually going to go bullish on this one, where will our take profit target be? I explained to you earlier that we should be looking at the supply zone at least in the meantime, and then if we have a breakout of that structure, a retest, then we should be adding more position to our existing trade for that bullish opportunity. So this is the scenario we are looking out for, and let's see how price action plays out in the next couple of hours as we head into the New York session. And whatever happens, I'm very sure we are all prepared based on the information I've just given you and the parameters we've identified here. I'm very sure you are prepared. You won't be caught up in any dilemma. And you can also munch my screen so that you can use it as a reference point when you're about making your own individual decision. So this is my scenario here, or the XAUUSD. If you have any question whatsoever, feel free to drop a comment in that regard in the comment section, and I will be willing to be of help. Pep 80, good morning to you. How are you? Ariel, okay. It's a privilege to have you around too. Imperator 369, how are you doing? GM3, hello. Hey, Scott Benchy, how are you? I think you're a little bit late today. Hope no problem. Trust you are doing well. All right, so in the absence of no questions, let's take one more pair before we call it a day. And the pair we deliberated on yesterday is the EURUSD, and let's look at what's happening on the EURUSD as well before we call it a day. So on the EURUSD, I'm still expecting that bullish potential, despite the fact that we had that bearish run during in the last 24 hours. Let's look at what's happening on the higher time frame. Let's see the structure we have here. Let's go to the daily time frame. Let's see what's happening in the daily time frame first. So on the daily time frame, it is very, very obvious that price action has been on a long-term bearish momentum drive, and price has been respecting that bearish trend line since the month of February. We can see how anytime price comes into the trend line, we saw that it gets rejected, and then we saw this one to here before we saw this huge expansion that broke down that demand zone at 1.03700 area right into the 1.01 area. And now the next thing that will come to anyone's mind is, okay, fine, we might be expecting price to come back into that bearish trend line to give us another opportunity to take that bearish drive. Well, it's not every time price action works this way, but it's appropriate that we scale down to a much lower time frame to actually see what's happening in the market to determine if we are actually going to go in that direction. So scale down to 4 hours time frame, I was able to identify a reversal pattern. That is, we saw one here, we had a demand zone at the 0.99700 area. We saw multiple rejection of this area, which makes this area a reversal pattern, and which looks more like a double bottom structure. And we have our neckline sitting at 1.0200 area. And during the course of last week trading session, we saw a breakout of that level, a retest of that level, giving us further confirmation that we might be having a bullish opportunity that could lead into that bearish trend line. But if we look closely into what has been happening since the later part of last week, we saw our price has been respecting the 1.02700 area. As you can see, anytime price comes into this level, we see multiple rejection by the sellers. Hold on a second. Anytime price comes into this level, we see multiple rejection by the sellers, making that area a very, very significant supply zone. So I was able to identify the supply zone here. And one thing that we will be doing is we want to be very, very cautious of how to take advantage of any move right here on the Euro USD. So right now price is back into our key level at 1.0200 area, and as soon as price got into that key level, we saw a sharp rejection by buyers, giving us a clue that I think the bulls are still around, are still within this juncture in the market. So I want to think that this area is still going to be respected one more time. At least in the meantime, it might get into the 1.02500 area, but on a long-term perspective, we want to see a breakout of that supply zone, taking out all the selling positions here, then a retest of structure to now join that long-term bullish potential here on the Euro USD. But on the short term, since we are here today, we want to see what's happening during the New York session. So let's scale down to a much lower time frame, and I think the 1 hour time frame is most appropriate at this point. So scaling down to the 1 hour time frame, well, if you look at the structure we have here in the last 12 hours, we can see our price rejected this key level at 1.0200 multiple times during the last 24 hours. We saw this rejection here, and we saw something close to that rejection around this area, giving us something that looks like a reversal pattern going into the New York session. So if we have a reversal pattern, what do we expect to have a neckline, and that neckline should be our yardstick going forward. So if I bring out my line chart at this point, we have a neckline sitting right at a psychological level at 1.01500 level. So let us identify that neckline here, and I'll be giving it a purple color to differentiate it from our key level. So we have a neckline sitting at 1.01500 area. So one thing we want to be seeing is a breakout of that neckline. We want to see price action break out of that neckline to give us that signal that a bullish potential is going to happen, and then a retest of that neckline on our lower time frame. You can scale down to your 5, 10, 15 minutes time frame to look out for that retest of structure. Then we want to join the rally to the upside. So where will our take profit target be? Since it's just a short-term trade, because we still have a very strong supply level around this area, which might send price crashing to the downside, we should just aim at around that area. I think 1.02500 area looks most appropriate, and that gives us about 90 pips to catch here. And if we see a breakout of that supply zone during the New York session, that is, we see a breakout of that supply zone that is taking out all the selling position here, then a retest of that structure should give us further confirmation to join the rally. So if that happens, we want to add more position to our existing trade. So this is the scenario we are going to be looking out for on the Euro USD. I'm still expecting that bearish move to happen, and the only time I want to sell the Euro is only if I see a breakdown of the 1.0200 area, that we see an engulfing candle right through that 1.0200 area. Remember, we don't get too excited at the sight of a signal, as we want to wait for confirmation in the form of a retest of structure before we want to join the decline to the downside. And if that happens, we should be aiming at our demand zone at this area as our take profit target, which will dovetail to, I think, about how many pips, that is 100, 150 pips to catch there if the selling momentum happens. So this is my scenario here on the Euro USD. I hope I made myself very, very clear. And if you have any question, feel free to drop in the comment section. And before I call it a day, it's very, very likely, it's appropriate that we quickly take a quick look at the pairs we deliberated on today. Let's do a recap. Let's see what we're expecting, and then we call it a day. So a quick summary: the first pair we celebrated on is the US oil, and on the US oil we're able to identify a channel, and right now we already have, if you are in with me, you should be already in the trade already. We had a channel here, and we saw a breakout of that channel. We saw a breakout of that channel during the early hours of today, and I told you that we were here when I was explaining this, and I told you that we want price to come back right above the $96 area, where we want to be looking for that bullish potential right into the resistance level here, where we'll be having our take profit target, and that's around the $100 mark area, at least for the meantime. So let's see how price action plays out in that regard. And if price moves right above the $96, $97 area, kindly move your stop loss to break even to protect your position size, because there is a possibility that price could still break down that key level at $95.50 level. And if that happens, then we want to wait for a retest of structure, that is retest of the structure to join the decline to the downside from here. So, but I'm not sure that's going to happen. But if it happens, this is how we want to take that opportunity, retest of that key level to join the decline into the $91 area. So that's that on the US oil. Then we moved on to talk about the UK oil as well. And on the UK oil, the same scenario is what we're expecting here. I told you to take advantage of any buying opportunity right above the $105 mark. If it happens, with the take profit target around between the 110 and the 114 area for the buying opportunity. And if we are going to be doing a sell here, I told you that I'm not going to be doing a sell until I see an outright breakdown of the 102 level. After, if I see an engulfing candle strike through this level, then a retest of structure should give me further confirmation to join the decline to the downside. So first take profit target sits at $100 mark, and if we have a breakdown of the $100 mark, then the retest should give us confirmations to join the downtrend continuation into the $96-95 area. Then we moved on to talk about the GBPUSD, where I still expect that bullish momentum to happen. And we are already in. I told you I've moved my stop loss to break even here to protect my position size. And I'm still expecting price to break above that bearish trend line here, a retest of that trend line to push price to the upside from here. So I'm still waiting for that to happen. And the other scenario is that if price breaks down this bullish trend line, then that's a signal that the market wants to shift. And if that happens, we want to wait for price to come back to do a retest of either the bearish trend line or the bullish trend line to join a decline to the downside from here. So our parameters for this week for this trade is this bullish trend line. So this bullish trend line should be guiding our bullish potential, and if we have a breakdown, then we should know that we have a shift in perspective. Then we moved on to the XAUUSD, where I told you, I gave you two scenarios where the key level at $1,720 mark shall be our guide. Anywhere above the key level appears most appropriate to buy the gold at this point. And if price breaks below the key level, I want to sell only if I see a breakdown of that demand zone, after which a retest of the demand zone or the key level should give me further confirmation to join the decline to the downside. First take profit target for the gold. If we are buying, I told you the supply niche around this 1,735 area should be where we should be looking at first take profit target zone, and that is around 1,500 pips, as we want to see price coming to this area. There's a potential that we could have a selling opportunity here because it was a selling niche in the past. So let's see how price action plays out in this regard. Then we moved on to talk about the EURUSD, where I told you how we expected the bullish potential on the EURUSD. Price has continued to respect our key level at 1.0200 level, and we have something that looks more like a reversal pattern right above that key level, giving us a clue into a possible bullish move to the upside. And because of that, we are placing our entry right above that neckline we identify at 1.01500. So we are looking forward to a breakout retest of structure on lower time frame to join the rally to the upside. So we have not take profit target around the supply zone yet. At the moment, we don't want to be too over ambitious, and if that happens, we wait for a breakout of that supply zone. That is, we want to see price take out all the selling positions here, then a retest of structure should give us further confirmation to join a trend continuation to the upside. Then the last one we shared was the USTech, where I told you I'm expecting a bearish potential here on the USTech. We were able to identify a key level at $12,350 mark area, which is the neckline of the reversal pattern we identified here on the 1 hour time frame. We have the reversal pattern here. Yes, we have that reversal pattern there. We already have that breakdown of that reversal pattern around this point, giving us a further confirmation that we might be going bearish here. So I told you that it's most appropriate to take advantage of any selling opportunity right below the 12,250 mark. Just below, anywhere below it seems most appropriate. So we have a range around this area to take selling potential, selling opportunities around this. Hold on a second, what's wrong with my pen? Selling opportunities around this area with the aim of take profit target at the support level of the ascending channel we identified on the 4 hours time frame, which will dovetail to, I think, let's see, a minimum of how many pips that is, at a minimum of 400 pips to catch there if price moves as expected. And one more thing I said here is that if we have a breakdown of this resistance of this support level, a retest of structure should give us further confirmation to join the decline. And remember, in addition to the key level as a parameter to guide our action is this bearish trend line, as we want to expect price to continue to expect that price will continue to respect this trend line. So if at any point in time as price continues to the downside, if it respects this trend line, we see reversal patterns along this trend line on lower time frame, we want to add more positions to our trade. As it respects it, we want to add more positions to our trade at price action goes downwards in that direction. So this is our scenario for today. We were able to deliberate on 1, 2, 3, 4, 5, 6 pairs today, which is quite a lot of opportunities lining up for us during the New York session. It has been a moment with you guys. I really appreciate every single one of you. And one advice I keep telling is that we shouldn't get too excited at the sight of a signal. We want to wait for confirmations in the form of a retest of structure. That is, if we see a breakdown or a breakout of any structure we see, we want to wait for price action to come back and do a retest of that structure to give us a confirmation before we join the decline or the rally. So this is my advice for you. Be patient and ensure that you're on standby to take advantage of these opportunities that we identified here today. So thank you very much for being around, and on this note, I wish you a wonderful day and best of luck during the New York session. See you tomorrow, same time, same place. Bye bye.